The countdown has begun. In a matter of hours, the Federal Reserve will reveal a decision.
Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment
that resets the cost of money globally. But here is the nuance most retail traders are missing. Jerome Powell is no longer the only force moving the markets. While the Fed debates 25 basis points, the smart money is already front-running a massive regime change in monetary policy. The bond market is pricing in a shadow mandate, betting on the next Fed chair's playbook before he's even taken office. Is the pivot happening because of inflation data? Or is the Fed being forced to align with a new political reality? If you hold cash, gold or stocks, the next 24 hours are critical. Let's break down exactly what the charts are signaling. First, let's look at the raw data. Why is the Fed cutting rates when the stock market is near all-time highs? Because the labor market is a ticking time bomb. The Fed knows that if they hold rates this high for too long, something breaks. Look at the numbers. Unemployment has crept up to 4.4%.
This unemployment rate has been going up. We're also paying attention specifically to younger workers as well as black workers. That could be trending up as well.
According to ADP, we only added 10,000 private jobs in 3 months. This data screams weakness. The Fed is terrified of over-tightening. They aren't cutting to stimulate a boom. They are cutting to prevent a bust. The markets have completely flipped. Bank of America just changed their prediction. The CME FedWatch tool now shows an 89% probability of a cut tomorrow. This isn't a maybe. This is the market effectively putting a gun to the Fed's head, saying, cut rates or we crash. We are looking at a move down to the 3.75% range. But the specific number doesn't matter as much as the direction. The trend is now officially down. This is where the opportunity is. When real rates fall, the dollar weakens. Institutional investors are already positioning for this. That is why the dollar is dumping to 2-week lows and gold is ripping to $4,260. This is a classic flight to safety. If you are sitting on 100% cash, you are effectively losing purchasing power starting tomorrow as the yield curve adjusts. Housing is next. Mortgage rates have already slipped from 6.9% to 6.19%. The moment the Fed confirms this cut, we could see liquidity flow back into real estate assets. But here is the technical twist that nobody on CNBC is going to tell you. Jerome Powell is essentially a lame duck. His term ends in May. The market is already pricing in his potential replacement, Kevin Hassett. Hassett is the favorite for the incoming administration, and he is historically dovish. He wants growth and lower rates. Traders in the SOFR, Secured Overnight Financing Rate, futures market are placing massive bets on this regime change. They aren't just trading Powell's decision tomorrow, they are trading the expectation of a pro-growth, low-rate environment in 2026. This is why stocks are holding up. The market is front-running the next administration. So, what is the play? The era of higher for longer is dead. The era of the great pivot starts tomorrow. If the Fed cuts, risk assets, so crypto, tech, small caps, get the green light. If they pause, we see a violent correction. It all happens in less than 24 hours. Do not be on the wrong side of this trade. I'll be breaking down the FOMC decision live as the numbers hit the terminal. So subscribe so you don't miss the alert. I'll see you on the charts.